Welcome to the Loveland Report and Loner Ranger Show. I am Cleve Loveland, Central Florida's best real estate planner, alongside Bruce Woodburn, the Loner Ranger. We're going to give you all your mortgage and your real estate news today. Thank you for tuning in. I'm going to go into some things, Bruce. I want to talk about down payments and why buyers, I still come across people tripping over thinking they need 20%. We're going to dig into that.
It's amazing that how much people really could be educated on this. Speaking of that, after you're done, I want to tell you about a class that I'm going to be teaching so that people will be better educated when it comes to buying their homes.
All right. We got May sales numbers are up. And what's your plan? What is your real estate plan? What do you need a plan for? Why do you need a plan? How can I help you with that? Do you need a plan?
I think you need a plan.
I think everybody needs 2 or 3 rentals in their portfolio. It's going to help them out a lot. So instead of relying on mom and dad, I trip over a lot of failures to launch, Bruce, when I go out and see people. And I'm like, why is the 50-year-old kid still here in the house kind of living off mom? And he's just a gamer. So anyway,
you know what? We see a lot of people that are supporting that. And there's a lot of multi-generational families out there, and they're screaming about affordability. But I think that affordability, and listen, I don't know about you, but it was hard for me when I bought my first home. It was scary when I bought.
Didn't you do it at 18?
No, I didn't. I actually started too late. And I wish I would have started in my 20s, but I started in my 30s. If I would have started in my 20s, I probably could have easily been retired by now. However, I started when it was right for me. But I was scared to death when I bought my first home. But the fact of the matter is that I don't regret buying any home. I only regret not buying enough. And I regret selling too many.
I regret selling. I sold 3 that I should not have sold.
That's my only regrets. But I will tell you something. Anybody that thinks that home ownership is not the right way, there is no such thing as a rich renter. You will amass more wealth as a homeowner than you will in anything else. And I'm telling you, you'll even get more from it than you would even the stock market. But you've got to be equally invested. And you and I, although we are all about real estate, we also are not putting all of our eggs in one basket either.
Yep.
Correct? You don't have all your eggs.
No, and that's where people got caught. In 2008, I got caught holding a bunch of real estate and not enough cash to support it, and mortgage payments that were higher than the rent payments. And you got to be careful on that. So
I agree.
I learned a lot in 2008, 9, and 10 and 11 as I clawed my way back out of that. But I think right now our market, we're soft on sales, Bruce. Inventory still holding steady. It's not climbing, which is good. I'm going to see some homeowners, and they got 10 or 15 competitors, not 20, 25 like they had last year. So I'm seeing that. But a house has to be priced right. I just saw one, and the neighbors were asking about, I sat down with a lady, and she asked me about her neighbor down the street, been on the market forever. And I pulled it up. They were at the same price at $699 for 10 months, and ridiculous. Same price, all 10 months. And then relisted for $659, sold in 7 days.
No.
So just a slight, that's what's that 7-8% above the market, and they're probably going to get 650. But buyers are very picky. They're very educated. In their phone, they can pull up what your neighbors sold for, and you've got to look nice. And one thing here, I always have people tell me, I've got a 50-point staging plan. The lady I went to see last night gave her my 50-point staging plan. She needs an estate sale. She needs yard work done. She needs the pool cleaned up, some pressure washing. I got all of that. I handle all of that for them because she lives in Winter Haven, and the house is in Lake Mary. And it's just hard for her to
coordinated all that.
I coordinated all, and I don't charge for that, but I've got people that I know what it takes to help make a house look nice and price right, make it shine,
and not spend too much.
So we're looking at spending $6,000 to $8,000, which hopefully will return us $25,000 in the price. That's worthwhile.
That is,
but the way it looks like a distress sale. So we're going to fix that stuff up, and it's not. Things like that I can advise people on.
To be positioned. So if you want top dollar for it, you have to be positioned to get top
and this
dollar.
Is this lady's real estate plan also involves her retiring, which she needs to give 6 months notice on. So I'll be talking to her every month for the next 6-9 months as she gets this work done. But that's what I do. I'm not looking to have a contract signed the day right when I walk out the door, unless you're ready to go on the market. But if you need help like that, call me at 407-352-8118 for Loveland Properties. We'll be able to help you.
Yeah. And you want to get your mortgage from the best possible mortgage place. Where is that? That is Cross Country Mortgage, 407-250-9144. That's 407-250-9144, or go to WeBringYouHome.com. Cleve, I'm going to be teaching a class that I don't teach very often. This is a first-time home buyer class, but I'm going to gear it toward investors, first-time home buyers, and move up. And I'm going to be talking about all the things that you and I have done to be able to amass wealth in real estate. But I want to help young folks get over that hump on what they need to do to be able to qualify for a mortgage.
Yep.
And I want to defeat the affordability factor, because if you are suffering from having cash in the bank, you don't have enough money, I'm going to show you how my down payment assistance program, my solar panel program that gives you money. You don't need any of your own money as a first-time home buyer. I can help you with an FHA loan with pretty much no money out of pocket. Now, everybody's a little different. Every scenario is different, but we'll also attempt to negotiate closing costs. I'm going to show you how to do that to be able to maximize your buying power. But whether you're a first-time home buyer, you're a move-up buyer, or you want to invest in real estate, I'm going to cover it all. We got about 45 minutes to do this presentation. I'm going to cover everything, and we got 15 minutes of questions and answers. That is going to be Thursday. I believe it's Thursday, the 16th. It's the 16th at 6 p.m. Zoom. Now, go to webringyouhome.com or call or text me now at 407-250. And I'll send you the link. That's 407-250-9144, or go to
That's July 16th,
Home.
right?
That's July 16th. Okay. That's June 16th.
All right. June 16th is a 16th, Tuesday.
Not July.
June 16th is a Tuesday.
Then it's a Tuesday.
Okay. All right. We got the right date.
Then it's the right date.
All right. So we talked about down payment, Bruce, and that's what I still come across people think they need 20%. And you are much better off to keep your savings, get some of your closing costs paid, and put down 3.5%, 5%, 10%. We just had
your return on your investment is greater with less money down than more money down.
I just see that's a big outflow of cash, and that's the hardest part. People trying to save up is the down payment. And I think you're better off keep that in your war chest and pay off some other debt, put it into the mortgage, just have a slightly larger mortgage. If you get your closing costs paid for $15,000 and you put down 5% instead of 10, you could be saving 20, 30 grand in your savings account.
Yeah.
And your payments, what's your payment? Your payment's $100 higher?
When you do the math, and here's the thing, if you are really terrible about your investments and you think that a high yield savings account that your bank offers you, paying you 3.5% is a good rate of return, then you should put more money down, because you're not investing your money properly.
No.
But if you've got your money in the market, you should be making at least 11.5%. That's the S&P 500. 11.8%. You should be at least making that. If you're not making that much money, you're not investing properly. You need a better money manager.
Yeah.
But if you are, you take that difference. You take 5% down loan versus 20% down, and you invest that other 15% that you didn't put down. It will oftentimes make your mortgage payment for you.
Yeah.
So you want to know the numbers? Let's do the numbers. I'm about realistic when it comes to those numbers. 407-250-9144. If you don't understand that, call me. Let's go over it on a Zoom call so that you're crystal clear, because you keeping money in the bank can sometimes be better than having a slightly higher mortgage payment. That's what I do. I help you get through that process. Conventional, FHA, VA. I love helping my veterans. USDA, no money down, jumbo loans, construction to perm, renovation loans, and I'm doing a bunch of reverse mortgages right now. I've got an insurgent of people. I don't know if we're all just aging out or what, Cleve, but maybe you and I should be looking at a reverse.
I like the reverse for somebody on very limited income.
Me too.
Or at the other end of the scale, millions of dollars invested and not too worried about leaving their kid something.
That's right.
And what's funny
there is a person that it doesn't work for, and then there are people that it does work for.
I've got several right now that are just on Social Security and the $2,500 mortgage payment, not having that, and having an option. They can the reverse mortgage. They can pay
it gives
some,
you a line of
interest.
credit that doubles every 10 years. There are some benefits, and there's a lot of falsehood to the reverse mortgages too.
Yep.
A lot of people think, oh my God, I'm going to lose my house. The bank wants to take my house when I die. That is not the case whatsoever. So if you want the truth about reverse mortgages, then you call me. We will go over it. I'll make sure that you have all the facts. No hype. 407-250-9144 or webringyouhome.com. Cleve, also, it's tax season. So I'm finding a lot of folks right now, it's time to get your taxes done. And if you are doing an extension, when you do an extension, you have to pay the government the estimated amount that you think you are going to owe, or else those tax returns cannot be used to qualify for a mortgage.
Yep.
So if you put down 0 when you do your extension, then the lender can only assume you made 0. So people do that. And I see that's a common mistake. Do not file an extension and then expect to go get a mortgage and you filed that you don't owe the IRS any money. And I see that as a common mistake.
Wow. Or get your taxes done on time.
Or get your taxes done on time.
Bruce, the numbers came in. How are we doing on rates? Have they settled down? Still the same? 6.25, 6.5?
Sixes right now. They're running the mixes. We get 1 or 2 days that they get a little bit better. I locked a couple of clients in this week around 6.25. I've locked in some VA that are in the high 5s. So they can still get in that price point, in that rate range, but it's up and down until we solve this issue in Iran. I don't think that rates are going to get that much better. And even when we do, I think they'll get a little better, maybe down into the low 6s. I don't think we're going to be seeing the high 5s again. And now we're hearing that the Fed is getting pressure to raise the Fed rate.
The economy's doing better.
Fed rate. But I think and Warsh does not want to do that. He does not want to do that because he knows that the inflation that we're experiencing right now is primarily due to Iran and this whole conflict. So once that's resolved, I think that inflationary number will get back into the 2s again. What do you think?
I think just getting that war behind us, but I think that's a good thing to put up with that. Right now, the Fed meets this coming week
Like
in 5 days. It's 99% no change.
No change.
Yeah, no change at all, which is good. And even for, let me see what they say for the next meeting.
Next one,
which
I
is
thought it was
August,
like 50%, but I'm seeing different reports on it. It'll be interesting to see how
next meeting's the same.
Yep. I think what's happening is the Fed's getting pressure from the central banks. And the central banks are like, if you don't raise your rates and we do, it's going to tank their dollars.
Yeah.
So it makes a lot of sense that they're putting pressure on us.
Well,
but I think what they should do is start helping us out, get this issue resolved, and then they don't have to raise their Fed rates anymore.
And also remember how when the Fed started cutting rates a year ago, the mortgage rates went up. It's kind of counterintuitive. But if they raise the rate, money would flow into bonds and probably help rates.
That could potentially happen.
But the matter is, what is your plan? I've got people right now, Bruce, and you know what? It's funny. I come across very few people still on the 3% 30-year fix, worried about giving that up.
There's more people with over a 6 than there are under 3.
And what happens is I'm like, if we want to keep that good rate, let's rent the house. And we go through that. And I've turned a couple people into landlords, and they've got that great rate on their old house. And they're cash flowing too, because that rate's so low.
Yep.
Right now, if you want a cash flow on a rental, you got to put down about 25 or 30% because the rates are running in the high 6s, right?
Yes, they are.
Probably
but I will tell you, and on a DSCR, you can do that and you can keep your rates about the same as conventional rates are going to be. So we are doing a class for real estate agents, and that's going to be I believe it's on the 24th. I'll put it on the website. But if you're a real estate agent and you don't understand non-QM products like bank statement loans, DSCRs, ITIN, asset depletion, we're going to cover all that in this class that I'm doing that you will not want to miss, because it's going to show you how to help more clients that need these products. You know that they say that over 25% of loan products right now are non-QM. Non-QM meaning that they're not Fannie Mae, Freddie Mac, HUD, or VA. They're outside of those realms. They don't meet those guidelines. But a lot of folks fall into that category, or a lot of folks want that type of product. We just closed Gavin's transaction. He could have qualified for a conventional loan, but he opted for a DSCR because it was easier. I've got a
bank statement loans are non-QM.
Bank statement loans are non-QM. DSCRs are non-QM. Asset depletion can be non-QM. Oh, we got to take a quick break here. We'll be back in 5 minutes with more of the Loveland Report and the Loan Arranger Show. Cleve Loveland at 407-352-8118. Or the Loan Arranger at 407-250-9144, or WeBringYouHome.com. We'll be right back.